Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday the 25th of September. Starting off with Alba Mineral Resources, where you can see that the shares have nearly hit the third target, 0.45 pence. We had the first one, 0.17, I think, and then up to 0.35, which was hit last week. 0.45 would obviously be very sweet for the bulls, but the question now is really whether we can go the whole hog and retest the resistance of 2018, which was 3.6. So let's see if that can happen over the next few days. I suppose the tightest of stop loss we can have at the moment really is that point, what's that, 0.35 area, something like that, 0.34 area from May 2019. So that is really the tightest we can get it, because obviously this is a relatively volatile situation. But above 0.45, the chance of a follow-on move towards 0.6 plus for Alba Mineral Resources, rather. Another mining situation, AMC Amur Minerals. Here we've had the stock stuck in this little trading range. I suppose the shares are sort of bouncing towards the 200-day moving average at 1.65, so above that, the glass technically half full rather than half empty. 50-day moving average at the target above 1.65, so that's at 2.1 pence, but at this stage only really back above the 50-day line takes us up to be able to project the shares up to much higher levels, the top of the channel from the beginning of the year at 3.75. So let's see how that pans out. But the longer the shares remain above 1.65, the better the bull argument. On to Bahamas, and here we can see that shares have made this sort of nice saucer formation here, really waiting for an end-of-day close back above the top of the initial September high at 2.8. So we're nearly there. If we can get that, then looking forward to June resistance, 3.5 pence plus as the initial target. But at least there is a reasonable setup there for Bahamas Petroleum at the moment. There was a bit of a tree shake in Empire Metals at the beginning of the week, but looks like the shares have bounced back after that. Bear trap below the 50-day moving average at 2.48. But we did remain loyal to the uptrend channel rather, from the early part of this year. That's got its floor near the 50-day line, and while we're above that, looking for a big picture target, maybe as soon as the end of next month, up to 5 pence. If you're cautious on the stock, wait for an end of day close above 3.13, which was the initial September intraday resistance. Stock which has been quite a headache in terms of we'll probably put both the bulls and the bears, is Iconic Labs. Interesting, I suppose, here. We haven't got much to go on. It's a very, very volatile situation. But after the bull trap through the August peak at 0.25 rather, we've come back to the 0.01 area. A higher low versus the initial September support, so that is a positive, as would be an end-of-day close above the 50-day moving average, currently at 0.012. So let's see if we can get that. At least that would be the first stage in terms of a potential rehabilitation and retest of the existing September resistance, that peak at 0.0335 pence. This stage, end of day close, quite obviously back below the initial September peak, would rather kill the idea of a lasting recovery here. Onto a stock which I haven't covered here very much, but it's good to see it back. But spiky price action here for iNexus. The good point here, I suppose, is again the way that initial support for September 3.15 pence, support yesterday at 3.31, and we built from that. A decent end-of-day close above the 50-day moving average today at 3.93, which looks as though it's very much on. Should see a retest of the initial September resistance at 6.9 pence. The big picture here is that through 6.9, we could head towards 13 pence, which would be the top of that resistance line there from March. But that's certainly a best case scenario target, and probably at least a month or two away, whatever happens. Kibo has had its fans over the near term, I think largely because of the holding in Katoro, but still haven't been able to break through the 50-day moving average of 0.25, let's say, or 0.24 pence. That is currently the minimum requirement for recovery here, even though we've got higher support for September versus the late July floor. So there is some constructive work here, but at this stage, still waiting for a breakthrough there. Unlike in Katoro, where you can see that we are starting to get underway in a decent way. Here the situation is that, if we can get the chart to scroll around, here we've got a decent breakout, not a brilliant breakout, but a decent breakout in the sense that we've broken that line from August. The line there currently at 2.6 pence, so above 2.6 pence, looking for a potential initial retest of the May resistance at 3.9 pence, but the big target here, hopefully over the next 1 to 2 months, would be 6 pence plus at that March resistance line projection. So above 2.6, potentially up to 6 pence plus over the near term. Mossman has been another difficult stock, very, very fidgety and difficult to grapple with. Here we've got the positive, really, that support like A Moore has come in at and above the 200-day moving average, so it does show that we're in a positive type of mood, but want to see really an end-of-day close through the 20-day moving average at 0.18 to deliver a decent target here, which would be the top of the March trend channel at 0.35. Stop loss currently really the 200-day line at 0.14. Mobile streams a mover today, and here we've got the situation where looks as though we'll get an end of week close above the 200-day moving average, and also this line of resistance at 0.22 broken from May, which is obviously a positive. In terms of what the upside might be, really looking towards the 0.4, 0.45 level at the top of this trend channel that I've drawn, while we remain above the 200-day moving average, so looking a little bit more encouraging. No such quibbles with Pantheon Resources. I think I covered this last week, and probably around the 34, 35 pence level. Bit of jiggery pokery in the mid-30s, but we've gapped higher today, and it looks as though the rather optimistic sounding call of 60 pence, perhaps by the end of next month, could still be on track, maybe a bit more than that now, 62 or 63 pence. An end of day and an end of week close today above 37 and a quarter rather, would be a decent momentum signal, especially as it's been accompanied by a gap to the upside today for Pantheon. Finishing off with Zoetic, which was the hero of, I believe, I suppose August was really the hero of August. But what's interesting here is that we've still maintained that gap that we had on the 10th of September. And really, while that holds, the top of that holds around 17 pence, we're looking for further upside, even if there's more consolidation here. If you're cautious about the stock, maybe wait for an end-of-day close through 25 pence, as we've had a double top there. But above 25, looks like Zoetic should head off to 40 pence as soon as the end of next month. That's it for me today. More updates probably the weekend.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.